would say I am extremely disappointed with respect to the decision that the country of China has made in further increasing their temporary tariffs on our canola seeds, which will add to the existing tariffs on canola oil and meal.
You think you've seen trade wars? Buckle up, because this one is about to shake the Canadian prairies. In mid-August 2025, China shocked Canada by slapping a 75.8% preliminary anti-dumping duty on Canadian canola seed imports. Overnight, Beijing effectively shut down a market worth nearly 5 billion Canadian dollars last year. For the farmers who depend on it, this isn't just another trade story, it's a financial earthquake. It all hit on August 12th, when Chinese trade officials announced the tariff would take effect August 14th, while they continue an anti-dumping investigation. The official reason? Beijing claims Canada has been selling canola below fair value, hurting Chinese farmers. But for anyone watching, it's clear this move is part of a much bigger fight. Canada, in step with the US, has spent the past year hitting China with 100% tariffs on electric vehicles and 25% on steel and aluminum. China has been firing back, and now Canadian agriculture is in the crosshairs. This is no small target. Nearly 70% of Canada's canola seed exports go to China. Alberta alone shipped $2.4 billion worth in 2024. Now, with a 75.8% surcharge slapped on top, that trade is all but dead. The fallout was immediate. Canola futures fell as much as 6.5% within hours. For farmers preparing for harvest, that means losing $50 an acre before the crop is even in the bin. Multiply that by thousands of acres, and you're looking at losses that could wipe out a season's profit. And the pain didn't start this week. Back in March, China had already imposed 100% tariffs on Canadian canola meal, rapeseed oil, peas, pork, and aquatic products. That move stranded hundreds of thousands of tons of canola meal in Chinese ports, forcing importers to dump it at a 30% discount elsewhere, over $120 million in losses. Now the raw seed itself is caught in the crossfire, and that's where the real damage hits. This dispute's roots go back to September 2024, when China launched its anti-dumping probe. That came soon after Canada's EV and steel tariffs. It's not the first time canola has been weaponized in politics. Remember 2019, when China blocked imports from 2 Canadian exporters over alleged pest issues, just months after Huawei executive Meng Wanzhou was arrested in Vancouver. That dragged on for years before trade resumed. Farmers know this could be deja vu all over again. Canola isn't just a crop, it's Canada's biggest cash crop, worth over $43 billion annually and supporting more than 200,000 jobs. It fuels small-town economies, from farm supply stores to grain elevators, from truckers to processing plants. Losing the Chinese market means trying to redirect massive volumes to other buyers, India, the EU, or the Middle East. But even with new deals, replacing China's volume and price is a long shot.
The Chinese Ministry of Commerce announcing a 75.8% anti-dumping tax on all Canadian canola, starting Thursday.
That will have a devastating impact on the price points for Saskatchewan's canola industry, and I would say ultimately Saskatchewan's ag producers.
The political reaction has been quick but measured. Canada's agriculture and trade ministers called the decision deeply disappointing and urged China to reverse course. Alberta called it a devastating blow. Saskatchewan's premier hinted at sending a trade mission to China, using the province's Shanghai office to restart talks. Industry groups are calling for the federal government to take the fight to the World Trade Organization, but that process can drag on for years. Meanwhile, harvest waits for no one. The human cost is just as real as the economic one. Many farmers are already stretched thin by debt, high interest rates, and volatile markets. A hit like this could be the difference between staying afloat and selling the family farm. Others are considering storing grain in the hope prices will rebound, but storage comes with its own risks and costs. In prairie towns where agriculture is the main employer, the ripple effects hit everyone: mechanics, restaurants, fuel suppliers, you name it. For now, the tariff is provisional while the investigation runs its course. The final decision is due in September, but China could extend it by up to 6 months. That uncertainty makes it nearly impossible for farmers and exporters to plan. If this drags on, it won't just reshape the canola market, it could harden the Canada-China trade war for years to come. This is about more than seeds and tariffs. It's about whether Canada can adapt in a world where global trade is becoming a battlefield. It's a test of political will, economic resilience, and how quickly a nation can pivot when its biggest customer turns hostile. And for the farmers staring at their fields of gold this summer, it's a reminder that no matter how good the crop looks, global politics can change the value of a harvest in a single headline. So here we are, caught between two economic giants, with Canadian canola in the middle of the fight. Whether Ottawa finds a way to negotiate or farmers are left to bear the brunt, one thing is certain: this is going to be a rough ride.
No Chinese company is going to pay 75% to bring canola seed in.
The tariffs are coming at an already tough time for the industry, where producers are dealing with slim margins.
And if you think Canada can shrug off a 75% tariff without lasting damage, you might want to think again. Subscribe for more updates, and let me know in the comments, what should Canada's next move be?